It's World Food Day, but as geopolitical tensions simmer, food prices are rising, driving inflation across the globe. The International Monetary Fund has warned British consumers are set to face the highest inflation in the G7 this year and next, predicting that the UK is on course to average 3.4% this year, before slowing to 2.5% in 2026. Well, this sits just above Japan, the next highest, which is set to average 3.3% in 2025 and then slow to 2.1%. The third highest in the G7 is the United States, where the rate is predicted to average 2.7% this year. But America is less likely to slow as much as the others, falling to 2.4% in 2026. And that downward trend isn't universal, though. French inflation is currently very low and set to average 1.1% this year. Next year, forecasters say it will rise to 1.5%. Well, across the globe, the rising cost of food is the leading factor, with grocery inflation usually outstripping the overall rate. In the UK, food and drink inflation could be as high as 5.7% by the end of the year, according to one forecast. Well, Rob Voss is from the International Food Policy Research Institute. Hello to you, Rob. Thank you for joining me. So we're hearing this prediction that the UK will have the highest G7 inflation, driven largely, we're hearing, by food prices. Why do you think that's happening in the UK?
First of all, thanks for having me. Food inflation indeed has been a key driver of pushing up the general cost of living in the UK. Last month, food inflation reached 5.1% and is set to increase further. And that's the second highest in the G7, among the G7 countries after Japan. The British consumers have seen sharp increases, in particular for fresh foods like vegetables, dairy and meat products. And your vegetable, beef and milk prices are up in good part because of lower production caused by the warm weather of last summer and because of rising production costs. The production costs are up because of rising wages, as farmers have found difficulties in finding sufficient hired labor during the summer period, the harvest period, but also because of increases in national insurance contributions for employers that has increased labor costs. In addition, the prices for meat and dairy have also increased in international markets. And as the UK imports more of these products than other G7 countries, this has pushed up food inflation in the UK by more than most of the other G7 countries and also European countries.
I mean, Rob, traditionally the UK has had very low food prices, hasn't it? But it all seemed to start to change in 2016. Is this because of Brexit?
To some extent, yes. There's several studies that were undertaken some a few years ago, but that show that Brexit may be responsible for about 1/3 of the rise in food price inflation since 2019. And although the European Union and the UK have an agreement that allow for largely free trade in goods and services, barriers to export and imports remain in the form of more paperwork that has caused delays in supplies, but also has raised the cost of bringing products into the UK. Those studies estimate that the average British household has had to pay about £250 more for its food between 2019 and 2023 because of these cost increases. However, that said, we cannot attribute the more recent spurt in food inflation to Brexit, but rather, as you mentioned, in good part to the impacts of the warm weather that had on food production, rising labor costs and the higher import prices.
So Rob, which countries in Europe do you think Britain should be looking to as an example? Which countries are doing this well, and what are they doing differently to the UK?
The countries that have kept overall inflation low, like France, Germany and Switzerland, they also have been able to keep the food price inflation down. But even more so, the countries, and including the ones I just mentioned, have allowed for the lower world market prices for oil, gas and other energy sources to be passed on to lower domestic energy costs. And that has helped keep food inflation low as well. In those countries, the lower overall inflation also translated in lower pressures on wage costs that also helped keep food prices lower than in the UK. And lastly, there are several other countries like Spain, Poland and Romania. They've helped the consumers more directly by lowering the VAT on food products. And none of this has happened in the UK. So that said, the forecast, I think also the IMF forecast, that Britain's food inflation may lower, not this year, but in next year, which is good news. But also the economic growth in the UK is expected to slow down.
OK, Rob, thank you very much indeed. That's Rob Voss from the International Food Policy Research Limited. Sorry, we're going to have to end it there, but thank you very much.